Let me go to a couple of stocks that I really pay attention to, and you've heard me mention before. Let's look at Charles Schwab. Charles Schwab today made another new high after really being pummeled during the banking crisis of earlier this year, And it came from this area of around $78 a share before it pummeled and went down below 50. It sits now at 58. I feel that Charles Schwab is a stock that very likely that the banking crisis, I think, is pretty much behind us, as much as people are worried that something in the future will get us. But again, I think I've answered this before. At the end of the day, the government will bail them out. They bailed out the Silicon Valley and Signature already, and First Republic. They will bail out other banks if they should default because of some rupture in the system in the months coming forward. But Charles Schwab ultimately, at many levels, is just a bank. I feel this stock is probably the most likely to have success in the remaining half of the year. And I suspect that good old Chuck, might be up another 15% by the end of the year. So I am in this stock, and I'm opining, but I feel this stock can return to at least $70 a share by year end. And we have a formation that looks positive to do that. These are what they call creepers, and creepers turn into leapers. And so if that's the case, I like Charles Schwab. Another one I like, and I've always liked, is this stock. This is a big part of our red oil. This is a stock that I will only give myself a marginal amount of credit here. This was something that was alerted to me by a value proposition from our value algorithm, and I'm now starting to see it take hold. It was another creeper, and it has now become a leaper. This is a stock that is paying a dividend at the price of about 26 cents a share. Think of it, 26 cents a share at the price of $14.70. It works out to be about 8%, around 8%. And look what it's doing in price appreciation for the year. Now, this is one of the things that red oil owns. It's been from $11.55 this year all the way to $14.72. It's a relatively inexpensive stock, but sorry, folks, it's a relatively inexpensive stock. However, it is up almost 20 some odd percent just over the year, 25% or so, and it's paying you an 8% dividend. This is in the red oil portfolio. It's also in the balanced portfolio to a smaller extent. However, this is a stock I really like. I would wait for any pullback and look to buy it. I feel this stock goes to 24. So, and when does that occur? I think within the next 9 months. Let's take another one, a competitor or another stock just like it, not doing quite as well, but guess what? Paying around a 9.5% dividend is Energy Transfer. You've heard me talk about these stocks before. I like this stock as well. They are both pipelines. They are both, if you own the stock, you will get a K1, which means that you will get a K1, which is something deductible on your income tax on a year-over-year basis, or a profit that you have to pay on. So keep that in mind if you have a personal non-custodial account. But I really do, where did my screen go? I really like this stock quite a bit. Another one that whatever happened, I'm sorry, folks, I'm running out of time anyway. But at the end of the day, what I'm really trying to point out is the market is in a pretty decent spot. Many of the portfolios have done very well. Some of our classic portfolios have definitely underperformed this year. But I take heart in the fact that I know that at the end of the year, the performance will definitely pick up a great deal. And I feel any risk that comes, which I still think exists through the third quarter going into September, in particular, the last month of the third quarter, could be mitigated by ownership of some stocks like this.